Oh boy, the pharmaceuticals just keep dropping, and specifically this stock has been dropping for some time now. This is Pfizer stock. They're a pharmaceutical and biotechnology company. As you can see in the 5-year mark, they're down about 35%, which is about $12.93. Let's go ahead and take a look at the stock financials, its intrinsic value, to see if maybe this would be a good investment for our portfolios. Now, here are some key reasons why Pfizer has been down all throughout 2024 and also previous years, because as we just saw in the last chart, it's been down almost for 5 years. One of the reasons is the decline in sales for this. As you can see here, I'm not going to mention it because whenever I do that, my videos don't get pushed out. Every single pharmaceutical company has declined on this because this isn't going on in the world anymore. Another factor is the patent expirations that they have coming in the future. This is very important to know because if they don't have the patent, that means that their competitors could use their technology or their information, and then they could generate sales and take the sales away from Pfizer. So this could definitely raise billions in revenue by the end of the decade. Another important thing, and also another key reason why the whole healthcare sector is dropping, is because of the new pressure from the new policy changes in the US. Basically, the new president has demanded these companies to cut down on their pricing because, to be honest, in the US, the healthcare pricing that you pay is very high, and then when you go to the doctor, you don't really get paid out what you should be. And there's also a lot of lawsuits going on right now from patients, specifically with other companies that we've taken a look at in the channel, like United Healthcare. And basically what they want is for Pfizer to match the lowest rates that are currently in the United States. They've also made some deals that have not worked out. As I've said before in the channel, when huge companies like this, they have acquisitions, investors want to see those purchases be profitable, meaning that the initial company, the parent company in this case will be Pfizer, used their cash wisely. That wasn't the case for Pfizer in their deal with Seagen. They have yet, as you can see, delivered significant returns, and this is obviously raising concerns about their capital allocation. Not only that, pharmaceutical companies tend to be profitable, or at least their stock price tends to go up based on whatever they have in their pipeline, so whatever they're going to take out in the future. Pfizer was working on a development drug for weight loss that did not work out, and was a very, 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 very bad setback because competitors like Novo Nordisk, they were successful in making this type of drug. However, we take a look at the 2026 forecast for Pfizer. The analysts are estimating a 12-month average price target of $29.92, which is about a 27% upside. So this is one of the reasons why I'm taking a look at the stock, and I want to see if this would be a good investment for me. So let's go ahead and take a look at the numbers, the intrinsic value, to see if this would be a good investment. Now, if we hop back to the screen, we can see Pfizer has a market cap of 133 billion, which is no small market cap. They only have a PE ratio of 17%, and they have a crazy dividend yield of 7.32%. So before we do anything else, let's see how safe this dividend is, which can give us an indication of how safe this company is playing with this cash. So for example, the 7% dividend yield is about $1.72 per share, and they have a payout ratio of 52%, which is great. Usually you want this to be below 70%. They have a 5-year growth rate of 3.77, which is not a lot, although you gotta keep in mind this is because their dividend yield is already at 7.32%, and the dividend growth is 14 years. That means they have not cut their dividends for the past 14 years. Now, as always, if we take a look at the stock price compared to the PE ratio compared to the EPS, here we can see that the PE ratio is not at the lowest it's been, but it's definitely around the median range, except this high right here, we can't really count it. Well, you can, obviously, because it happened, it got to that price, which the stock was just extremely expensive here. But as you can see, the EPS has been declining, and this is usually not very good. The good thing is that the PE ratio and the share price have been falling along with it. It's not like some stocks like Tesla that keep missing on revenue and stuff like that, and the company just keeps skyrocketing. So for now, this is one of the main reasons why I'm holding back a little bit on this stock. I think once they start getting EPS above the levels of 2 and the PE ratio maintains below 20, I think I'll be interested in buying a lot more of this stock. But for now, I'm just holding on to it. So let's see the intrinsic value and see what this company is actually worth. Now, Pfizer, it has an estimated earnings growth rate of about 5.8. So if we plug that into our intrinsic value sheet, we can see that the original Graham formula, the price of the stock will be $27.74. In the updated one, it will be $24.66, and then in the analyst revised, it will be $15.70. However, if you've been following the channel, I do like to buy my stocks at a 35% margin of safety. Some of you might think it's a lot, but it just has helped me outperform the S&P 500 in my portfolio. That means that I will be able to buy the stock at about a buy price of $16. Now, keep in mind, I'm being full transparent. I do already own some shares of Pfizer, which I plan to hold because they pay me a dividend, and I do see a positive outlook for this company in the future. However, I don't know what's going to happen. But I am not currently buying any more at these prices. What I have been doing is selling puts below around the $23 mark, which gives me some premium. And then if it falls below that, and again, assign the puts, my average cost is going to go down. I'm going to get paid more dividends, and then I'm just going to go hold for the long term. That's just my plan. I recommend you to do your own due diligence, and let me know in the comments below what you guys think about Pfizer. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe, and as always, I'll see you in the next video.